So let's look at the audit approach. And that speaks to chapter 6, the audit approach. Another significant area the examiner tests in the AAA paper. So we have the content. Now, the current study text has changed practically. Okay, sorry, that's not chapter 4. Let me change. It's chapter 6. So the current study text has changed some of the terminology. So we no longer have purpose. We now have more of learning objective and learning outcomes. Let me share my screen again. Permit me. I think my screen went off. Okay. So we have more of learning outcomes, learning objectives in the current study text. So there's nothing like purpose of the whatever. So it has been updated, and we are going to align practically with the new content. So we have the content talking about the learning objective. Then we have the learning outcomes. Then we have the audit strategy we'll be looking at in chapter 6. Then we'll look at the business risk approach. Then we'll also look at the system-based approach. Then we'll look at the statement of financial position approach, which is practically, I think, 4 units. So from audit strategy down to SFP approach are the main contents of the audit risk chapter. Then we'll round up the chapter with the chapter review. Okay, I think my screen has frozen. Just a minute. I think after break, I'll need to restart my system. It seems to be hooking. All right, so by way of the learning objective, we'll speak to this chapter discussing generally audit approaches, how we approach audits and carry out our audit. And the learning outcome speaks to candidates being able to summarize the different types of audit strategies and the factors that impact which strategy is adopted in the audit work. Also, the second learning outcome is that you should be able to explain the business risk approach and be able to identify and assess business and financial risks. And the third learning outcome should be that you should be able to describe the system-based approach and articulate the component of a system of internal control. And finally, you need to be able to summarize the statement of financial position approach as it relates to the learning outcome, and what you have learned is very important. Okay, so let's look at the first or the section overview, which speaks to 3 units or 3 sections under the first unit. And the first unit talks about the business risk approach. That's a typo error. I'm going to change. It's not the auditor's liability, so I'm going to change that. This is the business risk approach, which is the audit strategies. I beg your pardon. Audit strategies, which is 6.2. And the sections we'll be looking at under that is a choice of audit strategy. We'll look at the summary of available audit strategies and also factors in the choice of any audit strategy the auditor chooses. So section 1, let's look at the choice of audit strategies. Now, an audit strategy is an overall approach an auditor takes to gather sufficient evidence and also form an opinion on the financial statements. That's generally what an audit strategy means. So when you ask that, what is an audit strategy? The roadmap, the blueprint you take actually to gather the evidence needed to form that opinion is what a strategy is. So there are several strategies, but the how you go about gathering your information is the strategy you are employing to form the basis of your opinion on those financial statements. So from this strategy, you could detail an audit plan. You could develop an audit plan from your strategy. And auditors can choose from several strategies. Speaking to the first strategy on the business risk approach. The business risk approach focuses on identifying and understanding business risks that could bedevil that could affect the business. So risks around the business generally that will culminate in the financial statements production are business risks. So this approach focuses on identifying those risks and trying to know what could go wrong that will culminate in material misstatements. Also, evidence is gathered by assessing risks and testing how management addresses these risks. So the business risk approach is an approach that is more of risk-based. And an example is in a manufacturing company that deals with raw materials, work in progress, they turn them to finished goods. Risk around inventory valuation are significant risk. Obsolescent inventory, material misstatements around inventory needs to be examined closely. For a manufacturing company, the risk, the business risk, will really deal with inventory because that is the pivotal activity from production to distribution. Everything centers around inventory for a manufacturing company. So when you are doing an audit of a manufacturing company, you need to concentrate highly on the business risks that involve inventory. So take note of that. So it will depend on the business or the sector where it's domiciled. If it is a service industry, then the business will now depend, for example, a bank, the business risk will now depend on deposits, funds management. So those are areas you should concentrate your business risk approach to. Very important. Then the second one is system-based approach. It tests the effectiveness of internal controls to decide how much reliance can be placed on them. So the system the organization used and the controls, if are strong, will culminate in lesser detailed transaction testing. But if from the test of internal controls, the controls are weak, then detailed transactions will be necessitated, will be needed. And that's what the system-based approach speaks practically to. So for example, an automated payroll system, you need to check whether the controls in the payroll system correctly prevents duplicate payments. So where ERPs are used to compute salaries, you need to be sure that the ERPs don't have malfunction situations where you have duplicate payments, and that is why testing around this you need to have confidence and comfort that the ERP does the right thing, because some people automate their payroll system or their payroll processes. So one of the risks is to ensure that the system-based approach captures issues of duplicate payments, and where mostly transfers are done from banks, you need to ensure that there are no double clicks, especially with the line of the automation of the process. Like the last place I work, we have 4 lines. Somebody will upload on the platform, another person will approve, a third person will check and approve, then the final 4th person will approve. So that quadruple system needs to be checked and ensure that there are no duplicate systems. Somebody is not paid twice his salary in a month. I've had a situation in a place where I work where we had a problem like that. Somebody got an alert twice and he was exiting the company. And he got that alert, man. That was the end. He had done exit interview. He was not honest enough to return the money. And the bankers, it was problem, big problem. Imagine somebody is earning 1 million and you got 2 million and you are exiting. The person just switch off his phone, remove his SIM, and that was it. Went to withdraw the money, brah, no reversal. So such costly mistakes, we need to apply the system-based approach to mitigate or check such issues. I remember that scenario vividly. People were paid twice. Some honestly returned it, but some carted away with it. But then the bankers had to face the wrath of the law. So the wrath of our company then. So checking whether the automated controls work is very important for auditors, and that this system-based approach is functional. All right. So the third area on the audit strategy is substantive testing approach. And this approach focuses directly on detailed testing of transactions and balances. detailed transactions and balances, opening and closing balances. You substantively test them to ensure their veracity and their correctness. Often this is used when internal controls are weak or they are unreliable. The substantive testing approach is used. So often when internal controls are weak or unreliable, an example speaks to auditing sales revenue by directly verifying the invoices. If revenue was recognized based on credit or based on cash, you check the invoices, you check the receipts, you check the contracts to ensure it aligns practically with IFRS 15. And that speaks to substantive testing approach. Then the next one is the statement of financial position approach, which is commonly used for small entities, and it concentrates on year-end balances rather than detailed transaction flows, because small entities hardly have robust or heavy transactions. And it works well where records are simple and audit trails are limited. So for example, in a small retail shop, verifying year-end cash by doing cash count, or stock by doing stock count and payable balances, rather than testing all the transactions, will suffice for a statement of financial position approach. So the key point is these four approaches are not mutually exclusive. In practice, auditors often combine them. So for instance, an audit may be largely system-based, but you can still include substantive testing based on the need, looking at the high-risk balances. So this is very important to take note of. And that would be the end of looking at how the choice of your audit strategies based on the four we've spoken to would necessitate what you do. Yes, please, Grace, go ahead. I could see your hand. Go ahead, speak freely.
Okay, sir. Based on this audit approach we just concluded,
yes.
We say this based approach, system-based approach, substantive test approach, and financial statement approach. Now, is there any of the first three that can be done without auditing the financial statement? Like business risk-based approach. Can it be done without financial statement approach? Without auditing the financial statement itself? I feel all of them have to do with financial statements. Am I right?
Not really, because it now depends on the sector you are auditing. So like we said, if you are auditing the banking sector, you have to specialize on some particular approaches. So using the four depends on the prerogative, is now the prerogative of the auditor, depending on the need. So talking about the financial statements approach, which is the SFP, which gravitates towards small companies. So the three, like we said, depends now on the auditor himself, what he wants to achieve. So any of the four can be used. You can use four of them, you can use three of them, you can use two of them. There is no hard and fast rule in answering your question. There is no hard and fast rule. What is necessary is that the basis of your opinion and whatever approach you use to gather your sufficient appropriate evidence is not what will be imprinted in the audit opinion. What they want to know is your approach is fine. Any approach you want to use is your, let me use the word, is your issue. But what culminates in the opinion is what matters. So answering you succinctly, yes, any approach, four of them, two of them, one of them, depending on the sector, can be used. I just hope I didn't confuse you the more.
Sorry, I'm a bit confused in this day because.
Okay, please, let's clarify that.
Like,
go ahead,
now,
share the thought.
If I want to use like a system-based approach, can I do it successfully and say I'm done with this auditing, perfectly done with every evidence without having to check the financial statement? Is it possible?
Yes. So the system-based approach now talks about the internal controls. So for example, now if you want to use the system-based approach to address issues around effectiveness of internal control, and the system-based approach has told you that the production of that financial statements based on the system. So for example, you are using Tally ERP or Tally Prime. you are using Tally Prime, and you found that all the entries on Tally Prime based on the postings, the transactions, you are okay. You've tested everything and you are fine. Then this approach is okay. And from the financial statements prepared, you followed through all transactions and all the postings are okay. You are good to go. You can give your opinion based on that. What we are saying is this approach will help you audit the financial statements very well. There are some systems where if they give you the ERP on systems, maybe for Sage, I've used Sage Evolution before. Currently where I work, we use Tally Prime. So the approach can be that, Kai, I don't like the production of the financial statements. What I've tested, the financial statements provided or produced don't resonate with me. So you may need to query that. But if the system-based approach works for you based on the ERP the company uses, and the production of the financial statement is fine in your assessment, please, in answering your question, yes, you can just use this approach to give you that level of comfort. So in answering your question, yes, please. Yes, please. You mustn't go through the 4 approaches.
Okay, thank you, sir.
All right, you're welcome. But then it's a good question. I love the question. It's good to be very sure, and that is why you have several approaches. Be very sure. And if the company or the system you are auditing is complex, please go ahead and employ any approach that will help you gather your evidence sufficiently. Yes, please. I can see Sam's hand up. Sam, please go ahead.
Okay, sir. Why do they refer to this business risk approach as top to bottom audit approach? Top-bottom audit approach. I think I saw it somewhere one certain time.
Okay, in answering your question, the business risk approach is a more robust approach. Why? Is because it's capturing the audit risk model. We talk of inherent, residual, and control risk. So those 3 risks are very important. So the 3 of them, based on the audit risk approach, is much more robust, and that is why business risk comes first. Is a robust approach because it helps you to identify issues around the audit risk model. Then the second one is the system-based. It's not as robust as business risk because it gravitates towards IT mostly and the production of the report. There are systems or companies where you don't prepare financial statements with Excel. You just post transactions and the financial statements prepares itself based on the IFRS. So the system-based comes second. Then the third is substantive testing approach, where if you see that the system, you are not sure of what is producing, then you need to test those transactions yourself. I need to link revenue to the invoices. If you recognize revenue for the year and you say it's 3 billion, I need to be sure that that 3 billion was posted correctly. There were no inflations or deflations in the amount. So substantive testing is where you've smelt foul play in the systems-based approach. And finally is the statement of financial position approach, which is the lowest and can be used for companies that don't even have ERPs, like small scale businesses. If they just produce Excel financial statements for you, you can just test cash balance, you can test stock count, verify. So small businesses, the statement of a financial position approach will suffice. You don't need to employ business risk approach. It's not a big company. You don't need to use system-based. You don't need to do detailed testing. Just the statement of financial position approach. But for a bank, a heavy commercial bank, you cannot do statement of financial approach and have the results, the sufficient evidence. No, it won't work. The work will not be detailed. You miss a lot of things. So that is why that question you asked, top down, from the biggest to the lowest approach, is a good question. I hope you got some clarity on that.
Yes. Thank you so much, sir.
All right. Fantastic. It's good to know. Okay. So fine questions, fantastic questions, and they are practical questions from both contributors. Thank you for bringing them to the fore. We're supposed to go on break, but then by 9, but it's good we address those questions. So any question? So that